Is $11 cheap for Kadena? That's the question I asked roughly 1.5 years ago. A video that got 12,000 views and more than 500 subscribers. Things have changed. Not only the interest for crypto has changed, the price of Kadena has changed quite a bit as well. We are now at $0.50. At the time, the ecosystem for Kadena wasn't really impressive. You only had Kadena Swap that was launched on a testnet where you could only swap dummy tokens. ABC versus XYZ. And the development around Kadena Swap also seemed to have halted. No more code commits in GitHub. A follow-up video half a year later discussing the subsequent dump didn't change much. There was no link on Kadena Swap on the website. Another decentralized exchange called KDA also didn't show much. Kadena Swap got rebranded to Bounty Swap, but even searching for Bounty Swap didn't lead to anything. It was so bad that Kadena wasn't even listed on DeFi Llama. But as said, times have changed. Kadena is now on DeFi Llama and the price is way lower. So is this now an opportunity? Is the price now fair? Can we pick up the pieces, so to speak? Do we get now an asset for a fair valuation? The past two videos were critical of Kadena, but over time things change. So let's have another deep dive at the ecosystem and let's start with how KDA separates itself technically. Let's have a look at the technology. A lot of people have this confused. A lot of people think that Kadena is a directed acyclic graph. This chart pretty much looks like a DAG, right? A technology that's being used in Caspar or in Taraxa. But the fast transaction speeds in Kadena are not being achieved by a DAG. Instead, we are using sharding technology. So there are many side chains that then in the end get merged to a main chain. This is how Kadena can scale relatively quickly. There is a commonality with Caspar though. Kadena is one of the few proof of work chains. Most modern blockchains have changed to proof of stake. It's easier to build, but Kadena doesn't go the easy route. But let's have a look at this ecosystem page again. How has this changed over those 1.5 years? Kadena Swap still doesn't have a link, but now we've got KD Swap and we've got EchoDAO and we've got a DeFi Llama page with EchoDAO and KD Swap as well. The total value locked though isn't that big, right? It's a total maybe 1 million or so. Not that impressive yet, but there are applications. This here is EchoDAO, and well, this is KD Swap. The people running the project didn't find the time to update their SSL certificate. So if you're okay with an unsecure connection, you can use KD Swap. What are the assets? They are pretty limited. This is the entire selection here. Now, what's the problem here? Are the people simply just lazy? Are they not developing? The answer is no. There is activity this time in GitHub. Look at this, right? These are all active repositories. Whenever this is wiggling here, we see new code commits, and Pact seems to have a lot of activity. And here comes the main problem with Kadena right now. It is Pact. Pact is the programming language specific to Kadena. So Kadena is not EVM compatible. You can't just port your Ethereum virtual machine code to Kadena. You need to develop specifically for Kadena, and you have to learn a new programming language called Pact in order to do so. And the problem is that that Pact programming language is even a moving target. So those are those code commits that we saw in this other chart before. There is changes to the Pact programming language. Now that's a problem, right? If you are a developer and you've got limited time, are you going to learn Solidity that you can then use on Ethereum and on Polygon and on Arbitrum and on Avalanche and on Optimism and on anything else? Are you going to do that? Or are you going to learn Pact, where currently the total value locked of the entire ecosystem seems to be at around 1 million? Developers aren't stupid. And so the Kadena team tried to incentivize developing with Pact. A $100 million fund had been launched to incentivize developing, but still How much do we see? That fund had been launched 1.5 years ago. Don't get me wrong, there are positive things. We see real progress. 1.5 years ago, all we had was a non-functioning decentralized exchange on a testnet. Now we've got a decentralized exchange actually on a mainnet that works with real assets. And the project isn't dead. There are still people continuing to develop for that packed programming language. But here comes the issue.
Time is running out.
You've only got a limited amount of time to attract capital when your token inflation is high enough. And that's unfortunately the case for Kadena. New tokens get issued every year. And in the last 12 months, we saw a circulating supply increase by 24%. So the capital within the ecosystem needs to grow by at least 24% per annum. All of that token inflation goes to the proof of work miners of Kadena. And even though you can buy the KDA token on pretty much any centralized exchange, still the capital base doesn't grow fast enough. Look at this total value locked development of the Kadena blockchain measured in US dollars. At one point we were at 11 million. Now we are at 974,000. That's a very low number for an entire blockchain. And this is then what happens to the price. This is KDA, the KDA token, relative to Ethereum. So how does KDA perform relative to Ethereum? Because when Ethereum goes up, then of course KDA also goes up, but we want to get outperformance. And unfortunately, we didn't see this for the last year, or even for the last 2 years. Since November of 2021 to today, Kadena underperformed Ethereum by roughly 94%. I'm sometimes surprised why people call Solana the bankster coin, the Wall Street coin. Actually, if we look closely, Kadena isn't that far away from this. It also has a very high inflation and it has been launched by people from JP Morgan. Here, look at this. These are the founders. Here is Stuart. He was an executive director at the new products division at JP Morgan. He did that for more than 5 years before going to Kadena. Then we've got Will, also a part of JP Morgan, a vice president, working as a technology manager for a bit over 1 year. So yes, times have changed. Prices in crypto have changed, attention on crypto have changed, but my assessment for Kadena has not. Unfortunately, though there is activity, there is not enough adoption. There's simply too much competition. There are thousands and thousands of Solidity developers, and if you come up with your own programming language for smart contracts, you will have a bad time. Your language needs to be learned. Your language needs to be battle tested. How safe is it really? And what makes Kadena so unique that people would be shifting to developing for it? This is not just an uphill battle. This is an attempt to climb Mount Everest 10 times over. It's impossible. But especially if you disagree, if you're an investor in Kadena, let me know what you think will bring in the developers. What makes Kadena so special? If you found this useful, feel free, of course, to subscribe. I publish videos here regularly, honest reviews. I don't get sponsored by any single project. And if you've got Telegram, feel free to join us. Simply search for Bitcoin Strategy channel or click the link down below.